Terry, we now know that the Federal Reserve is cutting interest rates by half of a percentage point, a 50 basis point rate cut. That is bigger than it had been originally expected. On the bigger side of things, when you think about this move from the Fed, this is an historic move, the first rate cut in 4 years from the Federal Reserve, and now it is sending a very clear signal that it is taking this fight seriously, that it wants to preserve the jobs market. In its statement, it makes that clear that it is making a half-point rate cut to try to preserve the jobs market with inflation now closer to its target. So again, Terry, a lot of division going into this. The Fed went bigger. It went with that half-point rate cut.
Right. Got it. Thank you, Elizabeth. They went bigger, Alexis. And so, first, why? Why did they go bigger, and what's it going to mean?
There were two camps of thought here. I mean, they got a lot of criticism, Terry, a few years ago when they started raising interest rates. Many thought they were too late to react to what was happening during the pandemic, and that's why inflation really got away from them when we saw inflation hit a 40-year high. So there were some who said, look, you need this aggressive half-point cut now to help out the job market, which has been slowing down, and to prevent the economy from maybe moving in the opposite direction, slowing down so much that we would possibly tip into a recession maybe later next year. Others are saying a half point is overkill, that it could actually, believe it or not, fan inflation again because it might be a stimulant for the economy. There are some who thought a quarter-point cut was the way to go. If you look at the number here on the screen, a live number of the Dow Jones Industrial Average, rallying now more than 260 points. Clearly, Wall Street believes that the Fed did the right thing and that it was time for this half-point aggressive interest rate cut.
All right. So, Elizabeth, this is Wall Street likes it. We were just looking at the stock market going up. What does it mean for consumers, though?
You know, what this means, Terry, is that we are clearly on this trajectory. The Fed is very seriously now embarking on this path of lower interest rates. I do want to point something out to you, Terry, from the statement from the Federal Reserve, which was just released, that there was one governor of the Fed that dissented. What that means is they didn't agree with this decision. They said instead they would have preferred that smaller rate cut, but otherwise all of the members of the Federal Reserve did vote in favor of this. And what that shows, there was a pretty big consensus around a half-point cut. And that shows that the Federal Reserve, as it kind of met over the last 2 days, as it looked at the economy, looked at the data that it has right now, it decided that this was the move that will ultimately result in what it wants to do, which is preserving that jobs market, like Alexis was talking about, and also continuing to keep inflation in check. So right now, what that means, you asked what it means for consumers. We will expect to see rates lower. When you think about mortgage rates, we've already seen them trending down. Those should continue to go lower in the months ahead. Credit card rates generally start to go lower, auto loan rates, impacts on businesses, too, who are taking out loans. And that's where you'll start to see this trickle throughout the American economy, Terry.